Hello everyone, welcome to this week's weekly market view for Monday the 3rd of July to Friday the 7th of July 2023. My name is Vishal. Let's get started. All right, so let's start with the monthly chart since we are in the new month, which is the month of July. Let's start with the monthly chart here. And market has made an all-time high eventually. So we are in a completely uncharted territory right now. We do have this level of demand now, this drop-based rally, which is currently far away from the current market price. We are seeing a little bit of a selling pressure this morning. So markets did go up very, very strongly, but are unable to hold the momentum right now. They have corrected slightly from the market open. Let's go to the weekly chart. And on the weekly chart, we do have this level of weekly demand now, which is going to be an important level to watch out for, this rally-based rally. This is the area which removed all this supply to the left, and now it has created a new high. Let's move on to the daily chart. So as we are seeing that we are completely, moving up. We had 1, 2, 3, 4 consecutive days up. So maybe market might take a little bit of a pause, but that pause doesn't mean that the market will start reversing. But that could just mean that it's just pausing a bit. Okay, so now we'll have to just closely watch at some key levels. There is one level of demand here, maybe on the smaller time frame. So let's go to the 75-minute chart. Yeah. So we have two levels actually. We have one level over here, which is the gap level, and this is the higher time frame gap level. And then we also have this rally-based rally over here. So maybe if you wish, you can possibly combine these two levels to initiate any long positions in the Nifty. On the 15-minute chart, there is nothing great yet formed, but on the 5-minute chart now, as we speak, we did see the market moving up strongly, and then we saw a little bit of a turn in price. And that also could be because the Nifty has achieved its daily ATR for the day. So let's look at the daily ATR for the Nifty. It's 135.20 approximately. And if we look at the open based on the daily chart, the open is 19,246.50. So 19,246.50 plus the ATR for the day, which is 135. So we just make it 136, round it up. So it tells us that 19,382.5 was the ATR for the Nifty for today based on the open, right? So if we look at the open today, let me just cross check this. We open 246.50. Yeah. So 382.50. Let's see what is the high on the Nifty. The high is 336. So that means that Nifty still has a little bit of strength to achieve its daily ATR for the day, right? So now let us see if we go to the smaller time frame chart. Let's say the 5-minute chart. And let's say if Nifty tries to reverse from here, what could be some of the obstacles for the Nifty to move up towards to achieve that ATR, right? So here we can see that the market has created a level of supply, drop-based drop. This is just created as we speak, just a few minutes back. So it'll be interesting to see what does the market do when it comes to this level, whether it moves from this area and prints a new low, or whether we are moving into a slightly consolidation phase, right? So this is the high for the day, right? So, and let us see if the prices do come here, and what we would expect is the price could come here and then start moving down again. Okay, so let us see if that happens. Maybe that is also because of some kind of profit booking. All right, so here are the levels on the Nifty. Now let's move on to the Bank Nifty, and let's start with the Bank Nifty analysis. So Bank Nifty is inching up and up, thanks to the HDFC twins. HDFC Bank and HDFC have both risen from those demand levels. But as you can look at the monthly chart right now, very, very bullish right now. We have this monthly level of demand. So there is nothing to stop the Bank Nifty as of now. If you look at the weekly chart, on the weekly chart, we had this, or rather we have this level of demand to which the prices have, nicely reacted, made a new high. And now we are just showing a little bit of a selling pressure here after, traveling up significantly for so many days. If you look at the daily chart, what is going to be interesting is today, how does this candle close, right? So all these candles have closed pretty bullish, but today we might have a little bit of a bearish closing, right? So this could maybe be a little bit of a bearish candle, or don't know, might just close as a doji. And that would dictate probably what the next, movement on the market could be, right? So we do have these gap levels over here first that need to be filled. So I'll just go ahead and mark this level here. And the reason why I'm marking this gap level is because this was the level responsible to make the all-time high on the Bank Nifty. So any time during this corrective phase, if the market does come here, we would expect the market to again rebound and start moving to the upside. Let's move on to the 75-minute chart to see if there are any important levels on the 75-minute chart. So on the 75-minute chart, without a doubt, I'm just going to go ahead and mark this level here, which is this base rally. And this is more or less coinciding with the daily level. So if you want to refine your level and, try and go for a better entry, then maybe this could be that level. Now, many of you might be wondering that, Vishal, will the market give us a pullback? Okay, so we don't know that whether the market will give us a pullback. But we can possibly go to the smaller time frames to see that happening, right? So in case, if you look at what is happening right now, what we could possibly anticipate is, the prices coming into this area over here. And so as you can see over here, the supply zone has just triggered as we speak. And there is a possibility that markets could react to this level of supply and start moving down. Now, there are some obstructions in place, so there could be something within this 5-minute level here. So I'm just going to go to the 3-minute chart just to see if there is anything over here. No, I don't see there is anything here. So maybe if the short does play out, then if the short does play out, then the target can be the day's low, right? So let's see whether that happens. But right now we are seeing this this area over here, and there is one more area which is more or less at the top here. And so just keep a watch on these two levels, right? So in case if the lower level doesn't play out, it's more less likely the upper level might. Okay, but then in case if both the levels are taken out, that means the trend is very, very strong, and the markets are in no mood of even giving that that small correction, to say so. Okay, so just keep a close watch on this. All right, let's move on to the next chart. We will check the Finnifty first, and then we'll move on to the currency pairs. So let's go to Finnifty, and I think on Finnifty also more or less the same patterns are being created. So if you look at the so Finnifty is also printed all-time highs on the monthly chart. Nothing, no selling pressure yet on the weekly chart. Also, it's printing highs. This is rather the level of demand from which the market is reacting. So prices do come back over here again. Can be a good idea to focus more on longs. This is just moved one way, so I would just go to a smaller time frame just to see the levels a little bit more clearer. And if you see here, we do have this this level here. So just mark this demand zone gap level. So this is one area on the 75 minutes that you want to keep a close watch on. And on the 15 minutes, nothing much. Maybe on the 5 minutes we see something. Yeah, so on the 5 minutes, it's pretty much a similar level which is on the Bank Nifty as we speak right now. So this is the area to watch out for. And again, because the markets are extremely bullish as of now, you have to be a little careful on these intraday levels, because this is more or less against the momentum of the market. So in case if you want to be a little aggressive, then you need to keep a very, very tight stop loss, and you need to um, keep some aggressive targets as well. Let's move on to the USD/INR now. And let's check what the USD/INR is telling us. Okay, waiting. Okay, great. So monthly chart, nothing much, just the same. Weekly chart is kind of trying to break this level of demand. If this level of demand breaks, it means that it is bullish for our markets. Markets will tend to move up, right? On the daily chart, also there is nothing much that is happening here. We are in this area here, which is already tested. So in case if USD/INR takes a little bit of a breather here and starts to reverse and start moving to the upside, maybe that could induce a little bit of profit booking in the Nifty, and the Nifty might start to correct a bit. Okay, but let us see whether that happens. On the intraday charts, let's go to the 75 minutes first. Yeah, so on the intraday charts, we have definitely hit a level of demand. So again, it's important to correlate this with the market move. And just because the market is making an all-time high doesn't mean that you just want to go ahead and just catch the running train as such. So market will give you an opportunity, and you need to wait as a trader for the right opportunity. And I think now, based on what is happening on the USD/INR, there is also a possibility that if in case the USD/INR starts to inch towards the upside, we might start inching on the Nifty and the Bank Nifty towards the downside, and might move into a little bit of a sideways consolidation. Okay, so that's what the USD/INR is telling us. Let's look at the India VIX, and let us see what is India VIX doing today. All right, so surprisingly, usually when the markets gap up or tend to move up, the India VIX actually more or less is moving on in the opposite direction. But surprisingly, today the India VIX has significantly increased. And I was also looking at the option premiums today. There was not a lot of drop in the put premiums, although the market rose very strongly in the morning. But what I could see is that the call premiums nearly doubled or even tripled. And that is the effect of Delta and Vega both moving up, and that really helped the calls. But again, VIX is again just probably taking a little bit of a breather here, and we'll have to see now whether the VIX levels start to move to the upside. Because generally, if the VIX starts to increase, then there is also a possibility that the markets will tend to correct, right? Because of the inverse correlation that VIX has with the Nifty. So let us see now whether the VIX continues to move down. If the VIX continues to move down, then more or less Nifty and Bank Nifty will also tend to move to the upside. Okay, but if the VIX starts to increase, and it's already hit the 12% levels today, then that's not going to be a good sign for the market, right? So let's see now if VIX takes a little bit of a help of this area here. And once it comes into this area, we'll have to see whether it continues to move up. And if it does continue to move up, that means the indices might tend to reverse a bit. All right, let's look at a couple of stocks. Let's look at Kotak Bank. So if you look at the overall banking sector, Kotak has not been a great performer, to be honest. And in fact, even today, after such a big rally, it's more or less in a little bit of a sideways range. Now, the reason why I'm bringing up this is because as a trader, when you know that premiums are fair, right now you can see that the premiums are in zone 3. right? So they are fairly priced. They are neither cheap, they are neither very expensive. At this time, when Kotak is trading right in the middle of demand and supply, it's also good to wear a hat of a non-directional trader, right? So as a trader, you want your positions to be a little diversified. So you might have some directional positions, you might have some non-directional positions, and maybe you can have a balanced kind of a portfolio, right? So that's important for you. And these are the key levels for Kotak Bank. We are not giving any recommendations here. We are just sharing the levels here. So whatever trade you plan or you devise around these levels is definitely going to be based on your own analysis. And if we look at some of the other setups, let's go to ACC. So on ACC, we have this level of supply which triggered today morning. It's around 1834 to 1850. So if the price, if let's say Nifty weakens and corrects, then we might expect to see a little bit of a fall in ACC or a small correction in ACC as well. The other one is Apollo Tyres. So let's look at Apollo Tyres. And this was one of the trade setups which was identified in our XLT sessions. So let's have a quick look at Apollo Tyres. And this was pretty much the level on Apollo Tyres. And in fact, today it hit both the targets, right? So price rallied all the way up strongly into this area on the 30th of June. And if you had held on to this trade, then this level played out pretty well. So this is Apollo Tyres. We also had one more trade on Tata Motors, which stopped us out. So let's have a quick look on that level as well. Let's wait for the charts to load. Yeah, so this was the level on Tata Motors, and because prices made a new low, I was expecting that we would at least try and give a little bit of a correction, but that was that was not to be the case, and markets gapped up into this area and then just broke this area. So we took a small loss here, and that's part and parcel of the the game of trading. We have to accept, we always make sure that we always keep strict stop losses. We always follow the rules, and I'm hoping that all of you do the same thing. So this is it from my end, guys. I hope you enjoyed this analysis. Watch out for the key levels for this week. And if you do like our channel, do not forget to hit the subscription button on YouTube and do become a member of our channel. Also pass on this message to your friends, relatives, whosoever you feel is interested in the world of trading. We do share a lot of educative material on this channel, along with the weekly levels as well. All right. Safe trading, everyone. Bye-bye. See you on next week.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.